Welcome back, Money Circle fam. Hope you guys are having another awesome day. And just like the headline said, I'm feeling dangerous.
And when I woke up this morning, I was feeling pretty dangerous.
I'm feeling good, and I'm feeling like if I started with $100, I could do some work given all the information and experience and knowledge I have now about investing and using some of the strategies that have worked for me and some of the ones that I don't think I would touch. So what we're going to talk about in today's video is if I were to start all over and you gave me just $100, how would I start investing that $100? What would my portfolio look like? What would be my strategy? And why would I choose that strategy? So let's talk about it. But if you're new to this channel and you want to learn about investing, maybe you're just getting started in investing, or maybe you're trying to learn new things and level up your investing game, this is definitely the page for you. So make sure you smash that subscribe button and turn on the bell notifications, because I come at you at least once a week with new content about what's going on in the investing world and how you can start building more wealth for yourself. So make sure you hit that subscribe button. But let's talk about what I would do if I had to start all over with just $100. So I've tried a lot of get rich quick type wealth investing strategies. I've tried the meme coins. I've tried putting all my eggs into crypto. I've tried the day trading method, all sorts of different things. But what I've noticed that works for me is just sticking to basics. So for me, my strong suit is research. I like researching companies' partnerships. I like researching their technology. I like researching their financials, digging into 13F filings reports and earnings reports, and making a decision from there. So if I were to start all over, I would stick to what I know and what I'm comfortable with. I wouldn't overcomplicate the entire process. With that being said, I've done a lot of research and there's a lot of hype going into the AI and quantum space. And with a lot of hype comes a lot of momentum and a lot of potential growth if you're trying to build a strong portfolio quickly. AI has been a buzzword for a lot of companies right now. A lot of them are using it. They're doing a lot of research and development to further advance that technology. They're starting to create partnerships, and they're starting to move in a direction that screams AI is the future. So there's a lot of speculation in AI right now and not a lot of deliverables, meaning that there are certain companies right now that have had their footprint in AI, and those are the industry leaders within that space. But there's other new avenues in the AI space that are just now starting to break out, that there's only a couple of companies that have proof of use that are seeing really good gains. And specifically what I'm talking about is the quantum space. Quantum computing is something that may not be there right now, but is a technology that as AI continues to innovate, as it continues to grow, as more and more funding continues to go into AI, quantum is the next evolution of that process. And the reason why is because if you look at quantum, it solves complex problems that as AI starts to advance, we're going to need to solve as quickly as possible. And this is just not something that the human mind is capable of solving quickly. Whereas if we put a lot of money and a lot of technology and a lot of research into the quantum space, it's going to solve a lot of the world's issues in a very short period of time. So when you think about the level of problem solving that quantum actually has, you start to realize the potential for it, and it doesn't just become hype anymore. It becomes something that as we start to get more proof of use, as we start to see it used more and more, and as more funding goes into it, it's an industry that will be backed by more investment coming into it, meaning that those people that are getting started in AI right now and are getting started in quantum right now are going to be the ones that reap the rewards 5, 10, 15 years down the road. So if I were to start with just $100, the vast majority of it would go toward quantum stocks. And the quantum stocks that I would look at is Rigetti, D-Wave, quantum computing, and IonQ. Specifically though, I would put my money into D-Wave because D-Wave actually has great financials. If you look at their revenue when they came out with earnings and they came out with their earnings report, they are cash positive, and that's more than the other quantum computing companies can say, meaning that they don't have to raise more investment in order to continue innovating. They can just use in-house money to advance what they already have technologically. So I would structure my portfolio in a way where I leverage more of my investment into a stock like D-Wave, because as time goes on, I think that's one of the pure plays that is going to see the most hype over the next 5, 10, 15 years. So that's 60% of my budget right there. But what would I do with the other 40? Well, I would create some sort of consistency and some sort of safety blanket if in the event that the D-Wave bucket goes bust. So I would invest another 30 of the 40 remaining into an indexed fund. And the reason why is because with an index fund, say something like the S&P 500, you know what you're going to get. On average, the S&P 500 gains about 10% year over year. So no matter what happens, whether we're in a downturn, an upturn, we have tariffs going on, we have any sort of unknowns or any sort of factors that you just can't foresee, you can bank on the fact that at least a chunk of my portfolio is put into something safe like the S&P 500 that's going to guarantee a rate of return of 10% year over year. And if you're somebody who you don't like to do a ton of research, you're not somebody who likes the idea of speculation, you're not somebody who likes the idea of taking a ton of risk, an index fund is crucial to build a balanced portfolio, because what that's going to do is that's going to allow you to not sit around and watch that $100 you have invested. It'll give you the opportunity to kind of sit back, enjoy your life, and not have to worry every single day that your $100 went down to zero. When you have consistency and a strong indexed fund, you can take solace knowing that no matter what happens, I'm going to get growth year over year from this specific fund. So at least part of my portfolio is protected. If the D-Wave thing takes off, awesome. If it doesn't, no big deal. I still have my index fund that's going to tuck me in at night and make sure that my portfolio is at least a little bit safer than it would be if I just over leveraged myself and put everything into D-Wave. So with this last $10, I really want to chase profits. I want to put the rest of my eggs into a basket that I believe is something that has high risk, high reward, but something that I also have really good confidence in. And this one's not going to be popular, and it's something that is definitely very risky if you don't have any knowledge of it, but I can rest assure you that with all the knowledge I've gathered and the fact that I've worked for some of the biggest banking institutions in the world, this is something that will be a mainstay and everybody should have in their portfolio, and that's Bitcoin. Now, I can get into all of the reasons why Bitcoin is here to stay, but I'm only going to give you one or two. And I hope with these one or two reasons that I give you, you can start to see the importance of at least diversifying part of your portfolio into Bitcoin, because it is something that, in my opinion, is going to be around for a very long time. And those people that have it now are going to be the ones that reap the rewards later. You don't want to be the person that's late to the party and then expect your portfolio to grow vastly if you're getting started 10 to 15 years after somebody else is. So the reason why I would put 10% of my portfolio into Bitcoin is because of the adoption going on right now, first and foremost, not only from a country standpoint. We have the United States doing a digital strategic asset reserve, so they're actively buying Bitcoin. But you also have companies and organizations that are doing the same thing. You have banking institutions that are now allowing their customers to actually put Bitcoin into their portfolio. You have other institutions like GameStop and MicroStrategy who are actively buying Bitcoin on a regular, consistent basis to shore up their finances. When it comes to Bitcoin, we're starting to see mass adoption with it. And as mass adoption comes in, less and less Bitcoin is going to become available. And obviously, what we know about supply and demand is as the supply goes down and the demand goes up, that's only going to push the value of Bitcoin up. So Bitcoin is over $100,000. This is an asset that I see minimum going to $250,000 and probably even more than that. But safely, I feel comfortable saying $250,000 is well within the ballpark of what Bitcoin is capable of. And I wouldn't be shocked if it went higher than that. So when you start looking at the potential gain, from going from 100,000 to 250,000, that's a pretty good amount of gain for an asset that eventually is going to run out. So the long-term potential return on investment for just putting 10% of your portfolio in there far outweighs the risk associated with putting that amount of money into Bitcoin. That's the first thing. The second thing is deregulation. Right now, the government is basically coming in, the United States government is basically coming in and saying, we're going to put less restrictions on banks. We're going to allow them to start custodying Bitcoin and start offering it as a service. And we believe that Bitcoin is going to be a big part of the future of the country, but also a big part of people's wealth building moving forward. So if the country and the administration is coming in and saying, hey, banks are totally okay to start buying this and offering it to their customers, that speaks volumes to what the potential in the future looks like for Bitcoin. So when I stack up both of those factors, to me, it's almost a non-negotiable that you have to have Bitcoin in your investing strategy moving forward. And I'm personally investing 10% of my entire portfolio into Bitcoin actively right now because I believe that it is here to stay. So definitely having that as part of that $100 investment strategy is an absolute necessity. So if I had $100 to start investing, that's exactly where I would start. But none of this is financial advice. I tell you this because I'm starting at a place where I can take a lot of risk, and I'm somebody who I've done a lot of research and I feel confident in my investing strategies. What your investing strategies look like, you have to have confidence in that too, which means that maybe what I'm saying is good for you and maybe what I'm saying is bad for you. So take what I'm saying as an education and not I have to do this, because at the end of the day, what your portfolio looks like is going to be different than what mine looks like, and your risk tolerance is going to be different than my risk tolerance. So that's how I would build my portfolio if I had to start all over. But let me know, how would you guys build your portfolio if you only had to start with $100? Let me know in the comments. Other than that, if you did enjoy this content and you want more wealth building hacks, ideas, news, this is definitely the page for you. So make sure that you smash that subscribe button. Other than that, I hope you guys have a great rest of your day. Peace.